Good morning, good afternoon, good evening to one and all. This is Rustin Edwards, based in the Nordic Estonian today of Tallinn, and my illustrious co-host Matt Stanley, and this is The Smoking Barrel.
Yes, it is. It is. It's the smoking barrel. We need a little diddly doo 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 doo
Well, we had that in
barrel.
the opening credits, but first thing to note is happy birthday, 2 year anniversary.
I know, 2 years. Yeah, I didn't even know until LinkedIn told me. So I'm
That's
I'm
what
sorry.
LinkedIn's
No, no,
good for. It's good for the birthdays.
2 years of talking not sense about oil markets. No, look, 2 years. Thanks to everyone who's been supportive. We enjoy it, and we're going to continue. And there's exciting things coming. It's the start of Q4, the 1st of October. We may have a website soon if people want to, because everyone's like, I love it, but I can't never contact you. I'm like, well, apart from the fact you just WhatsApp me, yeah, great. But in terms of like getting like the smoking barrel, so we will, as Descartes said, we think, therefore we are, or I think, therefore I am. But there's two of us. Um, but let's go Q4. I just want to start, and I don't do tax very well or sensible stuff, but I just the shit that's going on in the Middle East, the tensions in Lebanon, Israel, Gaza. We don't get political here, but I just hope and pray everyone is okay. Every day it seems to get more intense. Tensions are escalating, and I just hope that everyone's all right. I'm going to leave it there because I worry that I will say something I shouldn't. But yeah,
Well,
I just
as with
hope that
all regions of the
things.
world, there's a lot of stuff going on. Not only the continual war in Ukraine, as well as the
Yeah,
Lebanese issue, as well as what's going on in Israel. So just as long as people are home and safe, and hopefully peaceful resolutions come to an end, um,
yeah,
and bring
yeah.
things back to a sense of normality.
Yeah, exactly. And after the hurricane and Sudan, what's going on in Sudan, etc. Look, let's move on. Unfortunately, we have to put that moral compass down when we talk about energy markets. But yeah, I just hope everyone's all right. But anyway, where are we starting Q4, Rustin?
How about that 7116 handle? Are we going to
How
be
about
testing that?
71.15? Yeah.
Okay, so the bears of us, those bears in the room, we love to hear lower numbers every minute. That's a great thing. Probably going to see a test of $70 here in the next couple of days, depending on what happens on a geopolitical macroeconomic level. But again, it looks like the macroeconomics are well in the driver's seat, and it's all stemming from demand, demand, demand. Where is it?
Well, that's a good point, isn't it? And I'm pleased you mentioned that because when I wrote my diatribe this morning, that is my commentary. Um, all these obviously we
Wait,
just
wait, I
mentioned
thought you were
about.
going to get off your soapbox.
No, oh yeah, sorry. We just there you go. Is that better? So, uh, no, look, I mean all these tensions in the Middle East and threats to supply. There isn't any threat to supply. The conflict in the Middle East and the Eastern Med has been going on close to a year. Never been an issue about production. The market was pricing in the threat of a wider conflict, and it just doesn't. Like I said, moral compass aside for a moment, the threat about is demand coming in as many forecasts is simply trumping everything else that's going on in the market right now. And when you add on the OPEC are kicking the can down the road about bringing production back, but the big story we heard last week, big, we'll obviously elaborate on it, but that Saudi are abandoning their $100 per barrel target in the fight for market share. That caused prices to significantly drop. We're down 50 cents. Well, we're down about 80 cents from the high today. But yeah, look, what have I done to this bloody chair? What's your thought about that Saudi story?
Well, I mean, I think the first thing is everything has to be taken with a bit of grain of salt when people start talking price levels in Saudi Arabia, because Saudi doesn't post a price level that they'd like to achieve. A
Mm,
lot of this is assumed based on what people expect the Saudi budget to be, and therefore they say, I think the IMF was saying that Saudi needs $96 crude in order to balance their budget. That may be, but who knows? That's their
yeah,
estimate. And so to say that Saudi had a price level they wanted to achieve, I think is putting words into their mouth that don't exist. So, nevertheless, fighting for market share, though, is an interesting tact, but that could have a couple of facets to it. Facet number one is a veiled threat to those members of OPEC and OPEC Plus who are overproducing. Basically saying, get your act together, get yourself back in line. Otherwise, we are going to make you feel a bit of pain. Um, financially.
Yeah, look, yeah, do you know it's funny you say that because if you look at this, here's the kicker for me, right? Um, let me hang on. If you look at over the last sort of few months, what's happening with Saudi market share, right? They have, as Saudi as the de facto leader of OPEC, um, have taken the lion's share of the cuts, right? And in the fight for higher oil prices to balance fiscal budgets. What that break even price is, I don't know. I would say they're comfortable at $80 a barrel. Whether the IMF agree with that, I don't care. But it's what has happened is people have taken over the market share from Saudi, and their allies within the region, Iraq, have been overproducing and have taken that market share. I just want to talk amongst yourselves for a moment. But if you
Well,
look at how much oil
it's a
India,
combination of Iraq and the OPEC members. Plus, it's also you have a lot of new production that's been coming online. Guyana as one
yep,
point, West Africa another point. And so, with all this new production coming online, it is causing a bit of pressure onto OPEC. And every new barrel that comes online outside of the OPEC fold puts the relevance of OPEC less and less. When
yes.
OPEC loses its percentage base of global oil supply, how relevant do they become? I mean, at 25%, does OPEC become as relevant as they are at 30%?
Well, exactly. I mean, if you look here, you can see Saudi. This is Saudi monthly exports. Let's do it of crude and condensate. So you can see here. I mean, this is over 2 years. If you just do it, let's just split it by grades. I mean, you can see here. So February it was about 830,000 barrels a day. That was sort of the highest
To
over the
India.
last 2 years. Pardon?
To India.
To India. This is just India. And then in June, that dropped down to 530,000 barrels a day. Now, if you compare that, let's just have a look at Iraq. You can see here, like, I mean, June, okay, but Iraq have been increasing their market share. Okay, August, it was a little bit down. But, July, Iraq took over market share from Saudi in terms of how much Basra the Indians are buying, just under 1 million barrels a day. Now you can argue, okay, India are buying their crude from other people, but if we look at exports from Russia, for example, I'm using India here as a proxy because Chinese aren't buying anything anymore. So India are buying it all, right?
All right, well, we'll
No,
get into China a bit later.
exactly. But look, I mean, you can just see here the market share that Russia have 1.6 million barrels a day compared to Saudi, which is say 1 million barrels a day, and monthly average, 3 month average about 800, and Iraq's about 900. So it's Russia, Iraq, Saudi in that order. And I think India are probably the world's third biggest buyer of crude after China and Russia, China and US.
Yep,
Probably.
and the one thing, especially now with crude at $71, the price cap becomes in play.
Well,
Because
yeah, I mean,
now crude oil can move rather freely because on the relative price market, same thing with naphtha, gas oil, and fuel oil, all exports out of Russia. I believe we're all below the price cap on all products here for the last couple of weeks. And so if
are
that's
you
the case, that should open up even more competition.
Well, are you suggesting that there may have been some Russian selling coming into the market to make the price cap more competitive for those very exports of oil?
I would not say that would be what was going on. I believe the overall demand picture of the global economy has pushed crude prices to where they're at. But as crude prices have moved lower, it has opened the door back up to the price cap to allow more flow to come in on commercially viable ships. So it actually could be a supportive mechanism for freight as well as demand,
Yeah.
uh, or at least open demand, because now people can be comfortable buying a Russian barrel because it's no longer under the price, it's no longer over price cap.
Yeah, I mean, look, it's And I think, just going back to the Saudi story, because it's all relevant, if you're if you're Saudi and you're saying geographically, you know, I'm closer than anyone, closer than Russia, and I'm closer than Iraq, not by much, but a bit, to India, right? I want to pick up that market share. I want to produce more oil, and I need people to buy the stuff, so I need to incentivize them. And I think a lower price environment is something that is inevitable that Saudis are going to have to live with, right? Uh, is a $70 a barrel for Brent, if we manage to hold on to it, it's looking a little fragile. Is that a low price environment? I'd argue no. I'd argue it's lower than they would wish for. But I would say for the vast majority of OPEC members, for the paying public, it's kind of a Goldilocks number. Do you agree?
I would say it's probably an okay number. I wouldn't call it a Goldilocks number. I think in the 60s you get more into a Goldilocks framework for economic growth and development. At least in the current economic global economic state, $70 is expensive. Every
Right.
dollar that moved down increases GDP growth and also increases consumption. So there is a bit of an argument that to let oil drop should actually it acts as global economic stimulus because that internal price of energy goes lower. And so the more they let crude kind of float lower, the more demand it should bring into the picture and allow them to sell more oil. So it's a case
Yeah.
of it's one thing if you cut production and now you're selling less oil at $90. Well, if
Mm.
you sell more oil at $60, you're still generating cash flow. And are you generating just as much cash, even though you're producing more oil that you have? Therefore, being able to support your budget because it's not so much a price level of crude, it's a dollar level. It's an input of dollars that come in.
Yeah, and look, I think, and we mentioned this last week, I think as well, that you discourage the US shale producers from producing more. I think like we mentioned this last week, and I think that this will be a talking point throughout Q4 is it has, COVID done, right? I hope everyone's all right if you're still getting it. I don't know why. Why would you test for it? But anyway, that's firmly in the rearview mirror. China oil demand, okay, we'll talk about that in a moment. But if you talk about, um, you know, where they are now, are they back to 4 or 5 years ago where they're thinking, oh yeah, I forgot about them, the US oil producers. Maybe we need to live in a lower price environment so that we can sell more oil and we're not losing market share to those US oil producers who have filled the void when OPEC have cut production.
Well, I think, but you have to get that marginal price of oil down to, I think, a $60 level in order to make it where it's least profitable for a shale producer to drill a new well. You know, the unfortunate thing about that is the economics of activity will then reprice to the lower price environment. So it does cause a bit of pain initially, but then eventually all your drillers, your truck drivers, your pipers, your pipe fitters, all that work to get a new shell well on time will drop down accordingly. And so
Mm.
eventually a new price point will be set where they're actually making money again. But it takes
Yeah,
time. It's
yeah.
not instantaneous
Yeah.
flip the switch. It takes time for all that price to roll through the system to a point where it becomes economical again.
Yeah, look, I mean, it's I was I was with the guys on the radio yesterday morning talking about um, where oil prices, well, where prices at the pump, which are announced at the last day of every month for the next month, and the gasoline prices were announced 8% lower than last month. Crude in Q3 was down 18% in total, and I'm just looking now at where it was last year. Let's have a look. This time last year, where was crude? Where are we now?
Well, we were at
Um,
$90 last year, this time last
yeah,
year.
this time last year, second of October, $90.71. So we're $20 more or less on the nail, lower than we were this time last year. And okay, was that political risk being priced in because Israel, was starting, that conflict was really starting. But again, where did we close 2023? $77 we closed 2023, and largely the oil market has been range bound all year. I do think that 2025, I know we're going to cover that a lot more detail later on in Q4, our sort of outlook for next year, and I'll look back on 2024. But I just think that the market is ready for a new wave, a new range on oil pricing.
Well, I think it is, and I think it comes back to our perennial favorite economy, which has been
China.
the big miss that I think a lot of analysts did not get right is China and what is China's oil demand going to look like going forward. China has been doing phenomenal job in electrifying and greenifying its industry and its economy.
Yeah,
I think that's been the biggest miss that everybody has had, except for the smoking barrel, around what is going on in China and how much demand is China actually going to have on a go-forward basis. And I think that is the lever that keeps us at this current price level is a hope that with all the stimulus that China announced last week, there was a lot of stimulus announced when it comes to the real estate sector, financing levels in order to try to spur the economy and support the economy where it's at. Uh,
yeah.
if it doesn't bite, doesn't take hold, I think we could see $60 oil before the end of the year.
Yeah, I look. I mean, I think Bloomberg quoted it yesterday. Where is it? China stocks enter a bull market after their biggest surge since 2008, staging a remarkable turnaround with 9 straight days of gains since stimulus was really announced. Great, print money. Have a look. See, encourage people to buy what you need to buy. But we've said all year, the renewable conversation in China is very much front and center. Electrical vehicles, subsidies when it comes to buying an electric truck instead of a diesel-powered one.
Well,
And look,
it's even the natural gas trucks. I mean, a lot of their truck fleet has been transformed from diesel into nat gas and LPG. And we start moving it. And so when you think of it from an industrial standpoint, when you think of construction, all these heavy pieces of equipment, if they're not running diesel, they're running LPG, LNG.
yeah,
And so in that case, you are reducing your emissions, but still getting the same amount of work. So you can have a stimulative function around the real estate sector, which is still 33% of the Chinese GDP. And that's where the majority of the focus of the stimulus came into impact, is try to get the real estate sector back on track after the likes of Evergrande and
yeah,
um,
country garden and
Country Garden, all them exploded with their bad debt positions. So once you
but
get
look, look,
so
look, I mean,
trying to
sorry, so,
stimulate that growth is not necessarily going to impact actual petroleum, but it's going to impact more the other fuels that are being used to power their industry.
yeah. I mean, look, I think China is celebrating the 75th anniversary of the People's Republic of China today. Congratulations, everyone there. I hope you're having a nice week. It's Golden Week. But look, I mean, a friend of mine said the other day, long China is a crowded place right now, in terms of all commodities, steel, iron ore, coal, and especially oil. And I think, okay, you can incentivize the country and people to invest in it with stimulus measures, which has worked in the short term. And 9 days is very short term in any investment space. But if Golden Week demand numbers don't come back exceptionally strong, where does oil go? Because it's
Again,
reacting.
I think we
It,
see $60 crude. I think we see Brent structure go into contango down the curve. Maybe not a full carry, but into a slight carry. The curve is already flattened out massively. If you look for deck
massive.
deficits right now,
Yeah,
and it continues to be under pressure. But I mean, the whole thing about long China is the lemming trade. And I call it a lemming trade because that's been the trade that has worked for people for the last 15 years. You can't go
yeah,
wrong being long China because China was on an exponential growth pattern. And I think in 2018, 2019 was when the first hiccups started happening in the Chinese economy. And then COVID hit. Then you had the COVID recovery, but now that recovery is done. And now we're back to the same economic condition that was there in 2018, 2019. Overcapacity, underinvestment, and things, it's more of a mature economy, not a growing economy.
yeah. I
That's
agree.
something
And
that the world needs to grapple with, that the Chinese economy is not an infinite 6-8% GDP growth rate. It's probably going to start mellowing to 2.5, 3% like the rest of the world as it becomes a mature economy.
I totally agree. And I think that acknowledgement,
It hasn't been
acknowledging that,
acknowledged yet. It has not been acknowledged yet. People are
you
still
don't think so?
hoping. It's the hope trade.
Okay. Well, look, I mean, I think that once we see data come out, things are going to have to be revised downwards quickly.
Well, I
On
mean, when you think of yesterday, Chinese
is
PMI.
that did I give you that soapbox?
Yeah,
Sorry,
I'm
go
sorry. Here, let me. So
on.
Chinese PMI data came out yesterday, and the world was celebrating the fact that the Chinese NBS manufacturing PMI data came in at 49.8 when it was expected to be 49.5. So 49.8 is still contraction. It's not growth. It's just not as low as the forecast was. Now, the Caxion PMI reading came in much lower, and which basically deflated that bubble.
Mm,
But nevertheless, it shows that even the stimulus measures that were put in place, it's going to take a good 4 to 6 weeks for that to roll through the economy to see if it actually does spur on demand and stir on growth and economic activity. If it doesn't, then what do you do?
well, let me put it to you this way. If you're a Man United fan, you're used to losing. If you draw and you get a point, it's not necessarily a good thing if but it's better than it was. Oh, we're not losing. Oh, we drew. It was 0-0 on a cold, December night at Stoke. It doesn't matter. It's a draw. It's better than it has been. Would the fans celebrate it? Yes, because you feel like the rot has stopped. And I think that that's where markets reacted yesterday to Chinese PMI. I'm sure Eric Ten Hag is over the moon that I've just referenced Man United to Chinese PMI data. Don't say that we're not inclusive on this show, people. No, but it is that I think that's it. That's the sentiment, right? I think that lose, 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 lose. Markets gets a bit, the palate gets a bit fatigued with that. You celebrate a draw. It's still not growth. It's still below that crucial 50 reading. 50 it symbolizes growth, and below 50 symbolizes contraction. Better than forecast, better than it has been the last few months. That's where markets are reacting. Have they acknowledged? Has the overall market acknowledged that China is slowing down? Mate,
But
I don't think the market will ever acknowledge that.
Well, I think it's starting to trickle into a lot of the analytical reports that are coming out about Chinese growth, and everybody's now starting to lag the demand profile. And that's where part of the sell-off happened in crude. I mean, when you
Yeah,
had the headlines coming out of APEC from last week or last month about how poor Chinese demand is really turning out to be, and all of a sudden everybody opened their eyes like, "Oh my God, China is falling apart here. Oh my God, what do we do?" And that prompted the big sell-off we had in September.
yeah,
Um, and so I think people are still hoping that China will do something to get the growth back up and running. Because I mean, honestly, when you look at from a global economic standpoint, traders are addicts waiting for the next shot of stimulus from someone
of
to
course.
try to go bullish again.
Yeah, and I think you're right. I mean, look, we've laboured China today, but it is an important point. I think the stimulus measures given the markets a boost they needed. Like I said, the equity markets are on a bull run. But gas oil, I mean, we're now $70.94 on December Brent. It's down $14 a ton on October gas oil futures. Number and it's falling off now as I'm speaking. It's the middle of the window, I know. But it's Golden Week is I think personally, I'm going to go out on a limb here. If Golden Week data comes in poor, I think you're right. I think markets have got a six handle before you can say, "Oh my God, China aren't buying enough oil." And I think that will be the theme for Q4. There will be some updates because of geopolitical concerns, and obviously we've got US election coming up in 5 weeks. So there'll be some volatility around that. But yeah, China, look, I just think the long China trade, as my friend said, is a crowded space. Take what you want from that.
Yeah. Well, and speaking of crowded spaces, let's go talk about U.S. ports for a moment, because
Oh,
the
yeah.
ILA, the International Longshoremen's Association, has gone on strike, which is basically impacting dry bulk and container ports from Maine to Texas. Now, what could that mean for your Christmas shopping? You might not get that GI Joe with the Kung Fu grip.
Wow. Well, yeah, I mean, look, we've got Thanksgiving. I mean, people are buying now for Thanksgiving, right? I mean, it's what, 7 weeks away,
Yeah.
Thanksgiving, and then you got Christmas coming up. So, people will start, these days they start celebrating Christmas in November. So it's profound. I mean, these it's a very, I don't know if that's the right verb, well-timed strike.
Well,
But something
it
to
is
see
the
that.
end of their contract, so their contract has come to fruition, and so it's up for the contract was up for renegotiation, and they've been negotiating it since February. The ILA with America, but the problem that has come up is the fact the ILA wants more money for their people, more higher wages for their people. They keep showing that, oh, well, container ship companies were making 30, $40,000 a day on container boxes, so we should get a piece of that action for handling those boxes. Now, they fair to ignore the dip that happened in the market as well, but nevertheless, it is an impasse on pay. Now, the only safety valve that the U.S. East Coast ports have is the Taft-Hartley Act, which the president can order a cooling off period on the strike for national security reasons and get people back to work. Um, that has yet to
Where
been.
did you pull that one out of the hat? Where did you find that? That's an amazing bit of knowledge.
It's all in the head, man.
Jesus Christ. Non-stop. It's a
It-
gift that keeps on giving, Edwards, isn't it?
It's one of those
Sorry,
things
go
that
on.
the U.S. president has that authority. He can order them back to work for a 90-day cool-off period so that the ports will remain open, especially getting into this critical period of Christmas stock up and Christmas supply season.
Do you
Um,
think he does that?
I think it's probably beneficial that he does do it because you don't want to have going into an election the stopping of all imports coming into all these ports, which are then going to start hitting people's pocketbooks because cost of goods go up because you have to reroute goods to ports that aren't on strike, which are in
Who
the West
pays
Coast.
who pays those demurrage bills?
Oh, that's depending on the contract. Typically, labor-related strikes become force majeure because it's outside the preview of the charterer.
Demurrage for the uninitiated, because we're trying to include everyone on this show, is basically a parking fine for a boat. If it waits too long and the amount of time that his boat is given, then there are charges that the owner, because he's waiting around, or she's
Well,
waiting around.
it's basically a way to compensate the owner of the vessel for lost earnings because you're sitting around waiting to do cargo operations.
There
And
you
it's
go.
something that's outside the control of the ship owner because the ship owner doesn't own the port, doesn't own the facility. So therefore, if the ship shows up and the charterer cannot discharge the goods as required, they have to pay a fee to the owner for detaining the vessel until the vessel's free of goods to move on to its next charter party.
Demurrage. There you
Demurrage.
go. That's Edwards 101, demurrage state. But no, it's a really interesting point because if it carries on, the owners not position themselves for a US discharge.
Well, you can see, well, you'll see a rerouting of vessels, and it's already kind of happened. You'll see freight get rerouted to the U.S. West Coast, where the U.S. West Coast has a different labor union contract than the East Coast Gulf Coast. And so the ports remain open on the West Coast, and you'll see higher throughputs, but you'll see more delays because you get more goods going through those ports, and they can only handle so many tons a day.
Yeah, and
So,
you got Panama Canal fees and
well,
longer.
if you go through the Panama Canal, also you've got the rail fees then to get the goods from West Coast to East Coast. So you increase supply chains at that point.
So basically, the union have got holding all the cards.
They're holding a few cards, yes.
Okay, all right, that's good. I mean, look, I mean, freight is. I hosted a freight webinar, didn't do anything. I just hosted it and said hello, and then made come for the lame jokes, stay for the insights. Matt Wright put it together. It was really good. But we see freight on tankers staying weak out until Q2. But again, I mean, look, I'm conscious of time. There's loads to talk about as we have. Um, it depends if the story about market share does happen and OPEC bring back oil as planned in December, more cargoes on the water, freight should pick up. We don't see it though. Our view, the house view at Kepler, is that production cuts, OPEC production cuts, roll out until second half of next year. They just
Well,
not, don't
I
have a
think
choice.
that's something that has to be done because if OPEC, right now you're looking at most some analysts are showing stock builds with the current cuts being rolled forward.
Yeah, so do we.
And so if you don't, if Saudi does say, okay, let's go with the returning the voluntary cuts as planned, those stock builds get even bigger. And you could see I think about 1.1 million barrels a day build in Q2.
Yeah, that's what we've
We
got
start
as
getting
well. Yeah.
into the summer driving season. So it could be very detrimental to oil price. But again, if you're looking for market share versus outright price level, you might want to do that to get rid of some of
Yeah.
the least economic producers out there.
Yeah. And look, I think Brent structure just to close up. April, May, Brent is trading at 3 cents. It's in danger. And now we're trading $70.76 on the day. December Brent down 95 cents. Dollar stronger versus K versus the pound, 133.28. A lot to weigh up. A lot to
Well,
weigh
if you're
up,
an
mate.
oil bear, you probably want us to continue talking because we seem to have that position on the market, that power to the market right now.
Yeah, exactly. Yeah. Can we just have you on call all day, every day? We didn't get to
Oh,
talk
well,
about
anyway,
yeah, we didn't get to talk about new refineries. I'm in London next week, so we can record Monday. Let's do that. But no, good to see you. I hope Estonia. What's the weather like there, by the way?
oh, it's beautiful, sunny, and chilly. Winter is coming.
Jon Snow. Isn't
Jon
that true?
Snow.
What a
Winter is
great way
coming.
to wrap up. Yeah.
All right, so click like and subscribe. Tell your friends,
Yes.
tell your families. Tune in next week, and we look forward to speaking to you all again.
Ciao.